Are you prepared for the insurance apocalypse that's silently sweeping across America? What if your home insurance premium suddenly doubled? Or worse, your coverage was dropped entirely? The U.S. homeowners insurance market faces unprecedented challenges. Skyrocketing premiums, increasing losses, and relentless weather events are fundamentally transforming the insurance landscape across the country. Nebraska, Georgia, and North Carolina are experiencing the most severe impacts of this crisis. Each state confronts unique challenges that highlight the broader national problem. Devastating natural disasters from tornadoes to hurricanes and flooding are increasing in frequency and severity. The situation is further complicated by continued population growth in these high-risk regions. Nebraska sits in the heart of Tornado Alley, making it particularly vulnerable to violent tornadoes that cause widespread destruction and disrupt communities. The 2025 tornado season has been especially devastating for Nebraska. The state has experienced a significant increase in powerful EF3 or higher tornadoes, resulting in billions of dollars in insured losses. These severe weather events have profound effects on insurance markets. Nebraska recorded a direct combined ratio exceeding 110% for 2024, indicating insurers are paying substantially more in claims than they collect in premiums. Homeowners in Nebraska now face average annual premiums of almost $5,000 for policies with $250,000 in dwelling coverage, significantly higher than the national average of $2,400. For Nebraska homes requiring $300,000 in dwelling coverage, the average premium has climbed to $6,400 annually, making it one of the most expensive states for homeowners insurance in the country. The rate increases have been dramatic and swift. Between 2019 and 2024, Nebraska experienced a staggering 72.3% rise in home insurance premiums, placing it among the states with the steepest increases nationwide. In 2024 alone, Nebraska insurance rates surged by 22.1%, tying with Montana for the highest single-year increase in the United States. Multiple factors are driving these escalating costs. Nebraska's position in Tornado Alley exposes it to frequent severe weather events, including tornadoes and destructive hailstorms, which significantly increase insurance claims and drive up premiums. Additionally, inflation and persistent labor shortages have increased rebuilding costs, further intensifying the financial burden on Nebraska homeowners trying to maintain adequate insurance coverage. These challenges illustrate the growing pressure on Nebraska residents as they confront rapidly escalating insurance expenses with few alternatives available. Georgia faces a different set of challenges. Rather than tornadoes, the state contends with secondary perils like severe windstorms, flash flooding, and inland hurricane effects. These secondary perils receive less national attention, but cause equally devastating damage to homes and communities throughout Georgia. Insurance data reflects this mounting pressure. Georgia recorded a direct combined ratio of 106% in 2024, with premium growth accelerating dramatically over the past 5 years. Rapid population growth is exacerbating Georgia's insurance challenges. From 2010 to 2020, the state added well over 1 million new residents, and this growth trend continues unabated. While population growth benefits local economies, it creates significant problems for insurance markets when development expands into high-risk zones, exposing more homes to predictable natural hazards. Montana's ongoing struggle with flash floods exemplifies this problem. Older neighborhoods, constructed without adequate flood mitigation measures, now regularly experience devastating flooding during heavy rainfall events. This raises critical questions. How many other families face similar situations? And why does development continue to expand in areas that insurers know are prone to flooding? North Carolina presents yet another dimension of the crisis as a hurricane hotspot. The state regularly experiences devastating coastal storms, but what's changing is the dramatic growth in coastal populations. Coastal development has accelerated, particularly around Wilmington and the Outer Banks, as people pursue beachfront living without fully considering the associated risks. From 2010 to 2020, North Carolina ranked among the top 5 states for housing growth, significantly increasing insured property values in flood and hurricane-prone coastal regions. When major storms strike, insurers face enormous payouts. Hurricane Florence in 2018 caused $24 billion in damages, with a substantial portion of those losses impacting insurance companies. Despite increasing risks, coastal migration continues unabated, driven by affordable housing opportunities, lifestyle preferences, and economic prospects. This raises a critical question. Where will these residents turn when insurers begin withdrawing coverage or exiting markets entirely? This scenario is already unfolding, leaving homeowners stranded in high-risk areas. Nebraska, Georgia, and North Carolina share a common thread. Each has experienced explosive population growth precisely in areas most vulnerable to natural disasters. From tornado-prone regions to floodplains and hurricane paths, more people are relocating to areas that regularly experience severe weather events. Between 2010 and 2020, 6 states, Texas, Florida, California, Georgia, Washington, and North Carolina, accounted for over half of the entire U.S. population growth. It's no coincidence that many of these rapidly growing regions also face high risks from secondary perils and catastrophic weather events. Housing developments in these vulnerable areas has exploded, leading to dramatically increased insured values. Meanwhile, storm patterns, flooding events, and destructive winds show no signs of abating. Nebraska's tornadoes, Georgia's floods, and North Carolina's hurricanes create wave after wave of financial pressure for local insurance providers. The critical question remains: how can we address this growing crisis? Can insurers manage rising risks without making coverage unaffordable for average homeowners? How can communities accommodate growing populations in zones that were never designed to handle this level of exposure to natural disasters? One thing is certain: significant changes are necessary, whether through improved risk assessment methods, enhanced building codes, or relocation incentives. The status quo is unsustainable. Without meaningful reform, the delicate balance between living in high-risk areas and bearing the associated costs could collapse entirely. It's about financial survival. The question of how to make insurance sustainable again remains urgent. Thank you for watching our coverage of the insurance crisis affecting Nebraska, Georgia, and North Carolina. We hope this information helps you better understand the challenges facing homeowners in these states. Stay informed and prepared as insurance markets continue to evolve.